If you're looking at your tax bill this April and thinking never again, then this video is for you because real tax savings don't happen in March. They happen all year long, starting right now. The problem with the last minute tax planning, well, one, I'll tell you, my calendar in October was full all the way through the end of November, and by the end of November, my calendar was full all the way through December. And it was because of people who wanted to make a difference on their tax return. Like they knew that they were probably going to pay a lot of money, and they started meeting with me. And now they're meeting with me quarterly. But it was really hard to get in. Like some people who met with me back in May of last year called in November and they couldn't get in through the end of the year. They couldn't get in until January. And once January hits for the prior year, you're done. Whatever the numbers are, you're stuck with those numbers and you're stuck with writing a check to the IRS. So I don't want you waiting to the last minute. You need to be working on this plan all year long. We can fix the issues now throughout the year and not after it's too late. So what does real tax planning look like? Well, one, we're using strategy. We're being proactive. We're not going to be reactive because a lot of times people come in March and April with their stuff for the prior year, and then they're mad that they owe money, and there's not much that we can do. Like once those numbers are done, they're done. We can't like we're trying to be reactive. Like, yeah, we can maybe go ahead and take a home office or I can have you comb through some more personal receipts, seeing if there's any like business things that you might have accidentally paid for personally, like maybe you bought some electronics that you need for the business and use for the business, but still it's we can't do as good of a job when we're trying to be reactive instead of being proactive and taking into consideration what type of entity you are, what income you want to have, what is your income, and what are your goals? Where do you want to be both personally and in the business? I take all of that into account and I find out all kinds of information to figure out which strategy will work for you based off of your situation and your goals. And then we're going to collaborate. I'd probably be doing your taxes, but we might need a lawyer to make sure your entity's set up properly or your assets are protected. We might need to meet with a financial advisor to make sure that you are building wealth and building a legacy for generations to come. And this isn't just a one-time a year meeting. This is ongoing. We either meet monthly or we meet quarterly, depending on how much help you need to get your action into place. So why is April the best time to start? Well, one, you just saw your tax bill and you're probably not happy with it and you want to make a change. Your financials are fresh on your mind. You're motivated not to make the same mistakes as you have in the past. And there's still time left in the year. We have 8+ months left in the year to make changes that will change the production of your life, of your business, of your income, of your financials. So we have time. We have 8+ months during this year to make a change. And it's not just, oh, it'll just be better for this year when I pay taxes next April. No, these are changes that will save you money year after year after year. And when that accumulates, just think of how much money you are saving that you can put into your retirement, that you can donate and give, that you're not paying the IRS, right? All right. So what are some common strategies that if you wait too long, like you won't be able to implement this year? So one is if it's time for you to switch to an S corp, like there's deadlines for that. You want to make sure that you get that done in time. And also, if you're coming to me in January for last year and you're like, I think I need to be an S corp. I owe too much money in taxes. Well, you know what? It's too late because there's payroll that needs to be done and that stuff needs to be done timely. There's payroll reports at the end of the year that need to be done. So it may just be too late to be able to get that done. So there's also the window of opportunity where you can contribute to your retirement. If you've been listening to me for any length of time, you know that I am a big supporter of Roth IRA. That's what I tell you to contribute to. There's no tax benefit of putting it into your Roth IRA right now because you're paying taxes on it now. However, there's a benefit. You're paying taxes on the seeds when it's small instead of on the harvest. Just think of when that money that you contribute to your Roth IRA and you're taking it out and you don't have to pay taxes on it. That's pretty impactful. I was talking with a client yesterday. We're putting their 17-year-old son on payroll. And I highly encourage them to have him save half of what he makes every single month and to put that into a Roth IRA. We did the math on it. If he can starts now, just do $500 a month. And if he can just do 6 grand, not even the maximum of the 7 grand per month that it currently is, if we just do 6 grand a month and he can do this for the next 49 years until he is 59, do you know how much money he's going to have in the bank? Just making 8%, 8% interest, not even a lot of interest, like just kind of average, not going full out. I believe the number was 1.9 million and some change he will have in his retirement account when he is say 59 and a half and he can start pulling it out for retirement. $1.9 million that will be tax-free when he takes it out, that he'll have to be able to live off of. And that's just doing $500 a month for the rest of his life, for the next 49 years. So I don't necessarily push hey, I want you to put into your traditional IRA for that you'll save. I did another tax return yesterday and they put money into their retirement account because you don't pay taxes when you do the traditional side. But you also get a tax credit if you're below a certain income. It was only an $89 credit. I would much rather y'all pay tax now on the seeds and then not pay it on the harvest instead of flipping around, because we don't know when you retire in 10, 20, 30, 40 years from now. We don't know what the tax brackets are going to be. We don't know what the tax rates are going to be. We may think that we're paying a lot of taxes right now, but actually taxes have been way higher in the past. We're actually in a tax low. But anyways, I'll get off this soapbox. There's plenty of I've done other videos on Roths, IRA, and contributing, and with your financial advisor or with doing self-directed. I just want people putting money into their Roth IRA. And want you set up for the future. Okay, so another strategy that you could have missed is paying the kids or your spouse. And I have videos on this. I know I do. I have just look we'll put them down below, but it's paying your family members. So there's your wife, there's your father, your mother, your husband, your kids. So I've already done videos on that. So you can check those out, but that's another option. And then a lot of times people forget about taking their mileage. They're taking the home office. If they purchase equipment, they're forgetting that these are tax deductible. Your business should be paying them. And two, we should be writing them off. Just remember, December 31st is the deadline. It's not the starting point. Please do not come to me in December 30th, December 31st, and be like, hey, I want to switch to an S Corp. I want to buy a new vehicle. Because one, I like to take those days off. But two, it's almost too late. I can't be running numbers and figuring that stuff out for you on the last day of the year. And it should have been thought of throughout the year. Okay. Okay. So what are some planning opportunities you can still take advantage of this year? Well, one, there's always switching your entity type, switching from an LLC to an S Corp. That is very beneficial for a lot of people. However, you need to talk to me about it or your tax preparer about it, because I don't want everyone on an S Corp. Not everyone is made to be on an S Corp. I see a lot of times where people aren't making money in their S Corp, or they make very little on their S Corp. And it's not doing them anything. Actually, it's costing them more money because there's more compliance with payroll, have a separate tax return, 1120S, making sure that you're doing all the bookkeeping. Like, there's more compliance with an S Corp. And if you're not making enough money to justify it, it's going to cost you more money than it's going to save you in taxes. So that's why we need to have these conversations and we need to see where you're at. You can adjust paying yourself. That's another one. Again, I met with a client yesterday, and so much has changed since the last 3 months I met with them. It's amazing. they bought a new business. We were in talks of, okay, is this a good deal? Like, what price should we pay? What would be appropriate? What do we need to look for? Like, we went through all that at the last meeting, and now they bought it just a week ago. So now they have two businesses that are cash flowing great, and one business that the cash flow is kind of slowed down. Um, Things are kind of tough. So we can make adjustments and figure out, okay, should we stop, reduce the payroll over here, and maybe in this one and this one, we can start paying more for that. That way you're not losing any W-2 income, but we are spreading out your payroll within the companies to make it better for y'all or for the business with the cash flow. And and it doesn't have to be like that. That's just one example. It could be you're paying yourself too much, and then you're paying yourself too much in Social Security and Medicare, or you're paying yourself not enough, and it's a red flag to the IRS. Like you're taking out too much in draws and not paying yourself enough with W-2s. That's why I highly recommend coming to us, and we can help you with, it's called a reasonable comp. That way we're finding out exactly what you do, how much time you spend, and we're backing it up with documents and a report that if you were to get audited, we can literally be like, here you go. This is how much time I spend doing each of these activities. This is my skill level with them. And the IRS really can't say anything as long as it looks like, yeah, that looks right. And then you're paying the right amount of Social Security and Medicare taxes, and but we're saving you money too. I don't want to be overpaying in taxes in one area. So how we can adjust how you pay yourself. Like there's different ways that we can do that. I just explained them. That's one of the strategies. So another strategy is in the health, how much you're paying in medical expenses. There's a tax strategy that most people don't know about. It's called the medical reimbursement plan, an HRA. It's not right for everyone, but for those who it is right for, that's something that we can get implemented. A lot of times, if you're trying to take medical on a Schedule A, you have to have more than 7.5% of your adjusted gross income, and it has to be above that. And plus, you have to be able to itemize. So mortgage interest, property taxes, and charity, like, and then medical, if those numbers together aren't over the standard deduction, then you can't use medical at all. Or there's, the flex spending account with your work that you might have, or the HRA. So that's just another strategy we'll look at if your medical bills are really high and we're not being able to write off a lot of them. So another strategy is setting up your family on payroll, employment strategies. That's another thing we can talk about. And I will say, I am very happy that y'all are watching my videos. I know even my clients are watching my videos, and I'm finding out that they're paying payroll. They're putting their kids on payroll. However, they're not doing it properly. That's why you need a tax advisor. Because depending on your entity, and I have videos on this too, you can go back and watch, depending on your entity, you have to do it a certain way in order to save on Social Security and Medicare. So it really depends on the entity. Otherwise, you may be paying them and they'll be able to contribute to a Roth IRA. However, you might not be saving on the Social Security and Medicare tax, and it's 15.3% that you could potentially, in taxes, you could get rid of if you pay them the correct way, depending on your entity. And then there's also things like you have to make sure that, like, you have to have timesheets. I met with my client yesterday, one of my clients, and they just set up their son. And again, I told them about, make sure that they're putting away money for the Roth, like that $1.9 million versus not having anything to start now doing it. But they weren't doing all the compliance stuff. So, you know, need to make sure that we have, the W-9 on hand. We're doing timesheets and doing that just in case we get audited. We have all that backup, and we can just give it to the agent and we're good. So there's certain things like that that we still have to do as a legitimate employee. So another opportunity that we could take advantage of is making sure that we're tracking all your expenses, but we have the correct documentation for them. In the meeting yesterday, it's fresh on my mind. We went over this yesterday and just reminded them that any receipts over $75 that is purchased through the business, we need to have that copy of that receipt. We can either snap the picture of it on our phone using the QBO app, explained how to do that again, or if they want to be old school, like just save a copy of the receipt, put it into a file, And it's not just the owners doing it, the employees have to be on board too. So making sure that they're putting that policy in and then they're enforcing it. So just those types of reminders, making sure that they're keeping their documentation for better legit strategies in case they get audited. I don't want anyone to lose those strategies if we're not doing things properly. So making sure that they're done properly is another thing that I help people with. And then again, making sure that people are contributing to their retirement. No matter if you're 17 or if you're 50, like I still want people putting their money into retirement and then I also want to make sure that they're building their cash flow for that they can put money into retirement. So one of the things that we do here is we do a monthly or a quarterly check-in. Most clients, when they're first getting started, they check in with us monthly. And what that looks like, it's one 60-minute meeting a month with the client, face to face on Zoom. And then we also spend about 60 minutes planning for it, prepping for it, doing other things that need to be done with it, and holding you accountable. If you're doing a quarterly check in, you get one 90-minute meeting per quarter. And then again, we do spend about 90 minutes outside of that prepping for the meeting, reviewing your stuff, looking at your financials, all that stuff. We spend about that amount of time outside of it also. And again, holding you accountable, making sure that whatever the action plans that we set into action, like you're working on them or you're working towards them. We also we take a look at your profit and loss, your balance sheet. We take a look at your owner's pay, what your tax estimates are, and then strategy execution. So those are things that we do in these meetings, and we adjust as needed. Like I said, the client I met with yesterday, so much new stuff has happened in the last 90 days. Like they bought that business, they started paying their kid, they sold their house, which wasn't even a thought in their mind the last time I met with them. Like I knew about the other two, like I told them to start paying their kid and we were in talks about the business, but sold their house, bought a property, now living in a fifth will, wanted to know if they can write that off or how to do that. And then they're building a house. So there was so much to talk about in that 90 minutes. So you just never know, but we're able to adjust. And if you're not talking with your tax preparer about these things, like, they sold their primary house and they bought another one. There might be capital gains on that. That's questions I need to know, need to ask about. Um, so there's so much. Like I had another client, a bookkeeping client who sold their vehicle on December 31st of last year, and I'm doing their tax return. And instead of buying a new vehicle, they leased it. They leased it, and they thought that they were doing the right thing to save money. But now we have a huge capital gain on a vehicle because we uh, bonus depreciated it in prior years. And so a lot of it was depreciated already, and they got a lot of money for it as a trade in, but they didn't buy another asset that can depreciate. Those are conversations that we need to be having throughout the year for that we can adjust, like we can guide you better. We can talk you into doing things that will benefit you. We can run the numbers real quick. But if you don't tell us about it, we don't know, and then it's too late. Like literally, that was done on December 31st, and I'm doing the tax return in February, and I'm just like, oh my gosh, what did you do? And I had to call and explain what he did and how it affected his tax return. He was not happy. They're not a tax advisory client. I didn't know any of this. We are not in communication like that. But this is the type of stuff that I can help you navigate and overcome by meeting with y'all on a quarterly basis. So what does a tax strategy session look like? So some of the things that we do in that meeting is we're going to review last year's numbers. We're going to be looking at the current year-to-date numbers, seeing if anything's weird, seeing what the profit is. We're going to spot opportunities and we're going to spot red flags, and I'm going to make you aware of them. The red flags are things that need to be corrected. Like it could be your business just took a nosedive and you may know about it, but what are we going to do about it? So I'm looking at certain things like that. And again, spotting opportunities. What are some ways that we can ch- do or change or implement to be saving on taxes for this year. And we're going to build a custom tax savings plan for you. It all depends again on your situation, your entity, your goals, and where you want to be basically. And then we're going to set action steps. We'll set action steps, and a lot of times we even have dollar prices to go with it. Like if you do this, we're going to be able to save you this much in taxes. If you do this, we'll be able to save you this much in taxes. And then it's up to you. I mean, you don't have to do everything we say, but the ones that you do want to implement, we're going to hold you accountable and make sure that you get those done, because ultimately we want to make sure that you are protecting your assets. We're saving you in tax dollars. We're saving you taxes. And three, you're building a legacy. Like that's my heart for my small business owners, is I want to make sure that we're doing that for anyone who wants that help. So tax planning just isn't for December. Please do not wait to November and December to start doing this, because my calendar does fill up, right? It is for business owners who want to keep more of what they earn all year long. Let's make this year the year that you stop overpaying the IRS. The best time to plan for taxes is before the year ends, but the second best time is right now. We have 8+ months left to make 2025 the year you stop overpaying the IRS. Go ahead and book a discovery call. Let's build that tax strategy for you. If this was helpful for you, please subscribe and go ahead and share this out to your friends. Thank you.